Be Wealthy and Smart, episode 1564.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how consumer spending increased. And that's important because, consumer spending makes up 70% of the U.S. economy. So it is one of the most important indicators that we can follow to see what the economy is doing and to give us a little bit of foresight into what's coming next. According to Reuters, U.S. consumer spending increased slightly more than expected in August as households went on vacation and dined out, keeping the economy on solid ground as the third quarter progressed, while inflation continued to steadily pick up. The report from the Commerce Department on Friday suggested the economy has so far retained most of its momentum from the April-June quarter. Signs of the economy's resilience evident in other data this week, showing low layoffs and strong demand by businesses for equipment, would argue against the Federal Reserve cutting interest rates again this year. But the hiring side of the labor market is struggling, with job growth almost stalling in the last 3 months amid a lingering drag from trade policy uncertainty, as well as an immigration crackdown that has reduced the supply of workers. There is no support in this report for Fed Governor Stephen Miron's suggestions that policy interest rates have to be cut right away, and by a lot, said Carl Weinberg, chief economist at High Frequency Economics. Indeed, there is no recommendation in these numbers for any easing of monetary conditions at all. Consumer spending, which accounts for more than two-thirds of economic activity, rose 0.6% last month after an unrevised 0.5% advance in July, the Commerce Department's Bureau of Economic Analysis said. Economists polled by Reuters had forecast consumer spending increasing 0.5%. Spending was boosted by outlays on services like transportation, which includes airline travel. Consumers frequented restaurants and bars and also stayed at hotels and motels. They also boosted spending on recreation services. Outlays on financial services and insurance rose, as did those on healthcare, housing, and utilities. Spending on services advanced 0.5%, matching July's gains. Households also bought recreational goods and vehicles, clothing and footwear, and spent more on gasoline and other energy goods, as well as food and beverages. Goods outlays shot up 0.8% after rising 0.6% in July. Spending has marched ahead despite the significant slowdown in the labor markets. Consumption is being driven by high-income households as a robust stock market and still elevated home prices boost their wealth. Fed data this month showed housing wealth jumped to a record $176.3 trillion in the second quarter. But lower-income households are struggling and bearing a large share of the burden from higher prices on goods from import tariffs. More pain lies ahead when cuts to the federal government's Supplemental Nutrition Assistance Program, commonly known as food stamps, take effect. The dollar slipped against a basket of currencies. U.S. Treasury yields were little changed. Economists expect spending will slow. Personal income rose 0.4% last month after a similar gain in July. A 0.6% increase in government transfers accounted for much of the rise in income, with wages rising only 0.3%. Strong consumer spending contributed to gross domestic product, growing at a 3.8% annualized rate in the second quarter, the fastest in nearly 2 years. Before the consumer spending data, the Atlanta Fed was forecasting GDP rising at a 3.3% rate in the third quarter. Economists expect spending to slow considerably by the end of the year, undercut by higher prices. Though there has not been a broad rise in inflation, there has been a surge in prices of some goods exposed to tariffs. Businesses have been selling inventory accumulated before sweeping tariffs kicked in, preventing inflation from spiraling. Producers have also been absorbing some of the duties. Economists, however, do not expect this trend to continue indefinitely and expect businesses will at some point pass on the tariffs to consumers on a wider scale. Inventories were drawn down in the second quarter. The Personal Consumption Expenditures Index, or PCE price index, increased 0.3% in August after gaining 0.2% in July. In the 12 months through August, the PCE price index advanced 2.7%. That was the biggest year-on-year increase since February and followed a 2.6% rise in July. Excluding the volatile food and energy components, the PCE price index rose 0.2% last month after increasing 0.2% in July. In the 12 months through August, the so-called core inflation index increased 2.9% after rising 2.9% in July. The Fed tracks the PCE price measures for its 2% inflation target. The U.S. Central Bank last week resumed policy easing, cutting its benchmark overnight interest rate by 25 basis points to the 4% to 4.25% range. Fed Chair Jerome Powell said this week that near-term risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. So spending is looking strong and inflation is hanging tight at about 2.9%, which is above the Fed's desired 2% range. That means we have higher inflation but a weaker job market, which is a precarious position for the Fed to be in. Should we get higher inflation numbers, and I believe we have an important number coming on Monday, should we get a high number that could cause turmoil in markets, as it might make traders think that the Fed rate cuts that they're pricing in with high certainty too for between now and the end of the year might be in question. So we'll continue to follow the story and report back to you as it unfolds. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.